Welcome back. Oil prices this morning way below 80. Take a look at where we stand. Now just broke $77 a barrel on crude, $76.99 last trade there. That's down about 1/3% this morning. Markets are awaiting any results from the diplomatic efforts to reopen the Strait of Hormuz. Both the U.S. and Iranian officials signaling a deal could actually be close. While the U.S. remains the world's largest oil producer, American refiners say they still need specific grades of Middle Eastern crude. New reporting shows U.S. imports of Mideast oil are set to hit the highest level since the conflict began. S&P Global Vice Chairman Dan Brouillette joined me yesterday on the program, explaining America's energy position in the world stage today. Wash. Well, look, when you came out with your book, The Prize, it was so informative and sort of set the tone for this market for so many. Do you believe that things have changed significantly since you came out with that book?
Yeah, and I think certainly that one of the biggest changes is a dramatic change in the position of the U.S. We went from being the biggest importer of oil in the world to the biggest producer of oil, biggest producer of gas. That has been a source of stability, and that's why, although we've seen higher gasoline prices, it would have been much worse if we had been back in our old situation. It would have then really been a disaster.
That is a fantastic
growth in the U.S. is, I think people underestimate or don't see what a difference it is in the position of the United States and why we're better off because of that.
And joining us now is the former Energy Secretary and the co-chairman of the Headquartered group, Dan Brouillette. Dan, great to have you back. Welcome.
Good to see you, Maria.
So the president likes to remind us that the U.S. is producing more oil and gas than Saudi Arabia and Russia combined right now. That's not just an economic story, but a national security one, is it not?
Oh, it is indeed, Maria. Dan is exactly right. Dan Brouillette's exactly right. Look, I remember the days around 1973 when we were importing fuel, importing natural gas and crude oil into the United States. This situation would have been exponentially worse, where we're still in that situation today. There's still more work to be done, however. And I heard the commentary about the futures curve. I think once the Strait opens, those future numbers are going to drop, I think, into the mid to high 50s almost immediately. Once we can stabilize the market, the whack-a-mole analogy was a good one. I think things are heading in the right direction. You know, the diplomacy that is occurring in the Middle East, I think, is going to produce a positive result. Once we have certainty in the Strait of Hormuz and oil can flow freely around the world, these prices on the crude side are going to come down quite dramatically.
What about China? Let's talk about their position, because there are reports that China is expanding its influence over global oil markets as countries scramble to secure reliable energy supplies. The race for resources now another front on the broader competition between the U.S. and China, Dan. So what does China's growing influence mean for America's long-term energy security?
Well, I think what's happening in China, look, they've been denied the availability of cheap discounted oil out of Venezuela, cheap discounted oil out of Iran. Those things are going to hurt them and hurt their economy over the long run. What's going to be interesting to see is what they do in other forms of energy. What do they do in nuclear power? What do they do in solar power, for instance? I saw the announcements by the administration yesterday. I think that's a good step forward for the U.S. industry. But that's where China has begun this diversification effort over the last 20 to 30 years. They've really diversified their energy supply and their energy sources. They are still short, however, so the risk for them in the long run, I think, is higher than it is for the U.S.
Well, of course, the AI boom is creating an enormous new demand, but also creating a challenge for America's power grid. As electricity demand from data centers is straining critical infrastructure, lawmakers are pushing for new rules, and President Trump is ordering companies to generate their own power. Local communities are still weighing the cost of this rapid expansion. I spoke with the CEO of Chevron, Mike Wirth, as he said the biggest challenge right now in the AI race is no longer the technology, but the power. Watch this.
If you think about AI, you really have the input is energy and the output is intelligence. And in between, we've got data centers, we've got chips, we've got models, but the constraint on the system today is the power. We're helping to solve that constraint. The infrastructure is built and it's enduring, and it's where there's a lot of important value created. In this case, we're building 20 and 30-year assets that will endure through whatever happens with chips, which have a shorter life, continue to evolve with the companies which likely will have their own competitive dynamic that unfolds over this time, but a constant will be the need for that power, and that's the part of the chain that we're investing in.
Dan, he was telling me about this 20-year deal that they just announced, a partnership with Microsoft, where Chevron is going to be powering up this data center in Texas. And that's just the first of, I think, that Chevron is going to do more partnerships with other tech companies as well for more data centers.
I agree, Maria. This is a tip of the iceberg, and I think it's a very unique situation we face here in the United States. For years and years and years, residential demand outpaced commercial demand. For the first time this year, it's the other way around. Commercial demand is outpacing residential demand, and by significant numbers. But we also have the opportunity to meet that demand with a very new approach, much like what Chevron is talking about. Hyperscalers, others are willing to pay for their own generation and put it behind the meter, which is something new as well. And I think as policymakers begin to look at the regulatory structure around utilities, looking at the permitting processes around the siting of the data centers, but as well as the siting of new generation, we have a very unique opportunity to not only meet that demand, but create an entirely new environment for these critical infrastructures to develop.
By the way, that's another thing that we needed the Senate to do before they left for their recess, and that is codify the president's executive orders on permitting. Okay? That's something that is really important, not just for the oil sector, but manufacturing in general. They can't have these rules changing every 4 years, Dan. Do you think America can build enough reliable energy to keep pace with this AI boom while also keeping the grid stable, Dan? And what do you believe our viewers need to understand about this whole energy story that we may not be hitting on?
Well, look, Maria, I think we do. We have the most innovative, the most creative industry in the world. The energy industry is second to none. Oil, gas, coal, nuclear, solar, wind, whatever, you pick it, we are the best in the world, and we know how to do this, and we know how to build. You know, you're absolutely correct. The Senate does need to act on the president's executive orders, but I would also urge that they go one step further, because here in America, we have a very unique judicial system. And even when you have a permit, you may still be sued, and you may still slow down. You may still be slowed in the process of developing the infrastructure that you need to build. Those are the types of things that I think we need to fully come together on as a country and say enough's enough. We're going to build this. It's important to our national security. It's certainly important to our economic security, and they must be built.
All right, Dan, we will leave it there and keep a watch and hope to talk with you along the way. Thanks so much for being here this morning.